Hi there, today, we will be talking about the fall of Carvana. Carvana is one of the leading e-commerce company for buying and selling used cars, based in Arizona. After going public in 2017, the company's stock price skyrocketed from $11 to $360 at its peak in 2021. Since then, the stock price has fallen below its IPO price, and it is currently trading just below $8 at the time of this video. So, what happened to Carvana, and why did it crash so hard? The typical car buying experience hasn't been updated in many years. Customers have grown accustomed to the process of purchasing a new or used vehicle from a dealership. However, as COVID-19 hit, and lockdowns forced people to stay at home, the traditional car buying process had to change. Despite the fact that Carvana began operations long before the pandemic, the COVID-19 lockdown has created an ideal environment for the online used car retailer. With the economy stimulated and interest rates near zero, financing the purchase of a vehicle was practically free. In addition, the disruption in the supply chain made the production of new cars difficult. Consumers rushed into the used car market for all of these reasons. And in that market, Carvana offered the convenience of having a car delivered right to your door, with just a few clicks, which consumers appreciated. Listen to the CEO of Carvana explain why consumers love his company, back in August 2021.
At Carvana, customers can go to our website. We have tens of thousands of cars for them to choose from. They can go through the entire process of selecting their car, selecting financing, getting a value for their trade-in. That process takes minutes. They can go through the purchase process. Scheduled delivery will deliver to their door as soon as the next day, and then they get a 7-day return policy. And by virtue of building the model in a completely different way, we generally save our customers around $1,000. And the ease of that experience, the savings, the selection, I think, is what drives people to us. And then when it comes to selling your car, that's a really simple experience as well. You can go to our website, get a value in 2 minutes, and then we'll come pick it up from you and give you a check whether you buy from us or not. So that's the way the whole business works.
However, in just a year, the picture has completely changed. Carvana stock plummeted after the company reported third-quarter earnings on November 3, and the results were much worse than analysts had predicted. The number of cars sold is down 8.4% year-on-year, and the gross profit is down 31.4% from the previous year. The company has lost $1.1 billion in 2 weeks since the earnings day. Carvana is now worth $1.43 billion, down from $19.83 billion in just 1 year. Despite the fact that the used car market is still hot, several factors contributed to Carvana's recent misfortune. There is no more stimulus money, and the Federal Reserve is aggressively raising interest rates as inflation approaches a 40-year high. The economy is on the verge of a recession, and businesses are laying off workers in droves. Financing used cars has become extremely expensive for the average customer. New car production has also increased, as supply chains have improved significantly. Overall, used car sales in the United States fell nearly 13% year-on-year, as evidenced by Carvana's third-quarter earnings report. So, how did Carvana go from being a Wall Street darling to trading meme stocks? Carvana stock has fallen roughly 98% from its all-time high. According to the company, it had accelerated growth at precisely the wrong time, during a consumer slowdown, leaving a significant mismatch between capacity and demand, which resulted in a liquidity crunch. According to Consumer Reports, used cars that are 1 to 3 years old have prices that are comparable to what they sold for new. It may be preferable for a consumer to find a new car that qualifies for a lower interest rate, and also has the advantage of being a new car, with a factory warranty. In this situation, it makes little sense for a consumer to purchase a few-year-old used car over a new car. Carvana was not prepared for the economic downturn. The company thrived during the pandemic. There was stimulus money circulating in the economy, and people were looking for online shopping options. Blinded by the unexpected growth, they failed to take the necessary precautions to prepare for the rate hikes. The company was flying high after more convenient online shopping led to an increase in sales. However, the company didn't have enough vehicles to keep up with consumer demand. This forced them to purchase a record number of used cars at an unlucky time. At the same time, demand began to slow due to loan rate hikes. The company was also criticized for the amount of money it spent on marketing, including a Super Bowl ad that many thought was underwhelming given the platform. Carvana has clearly spent far too much money during a difficult economic period. Carvana has $6.3 billion in debt, including $5.7 billion in senior notes and no cash on hand. To cover losses, the company has consistently borrowed money. They've also borrowed money in the past to fund their growth plans. The most shocking aspect of their earnings report is the amount of cash the company has burned through. Carvana's cash and equivalents totaled $1.05 billion in the second quarter of this year, with only $316 million remaining. Carvana's third quarter sales fell 8% year-on-year, while profits per vehicle sold fell 25% to $3,500. Analysts also cite the debt issue as one of the primary causes of Carvana's share price decline.
Specific issues that have analysts as well as investors worried about the future of Carvana. When you look at really what's driving it, the used car angle is getting the most attention because the market is weakening. We've known about that for a couple of months. So that's one headwind that Carvana is facing. Another one is that it's less affordable for people to buy a used car right now, whether that's the high prices, which remain elevated, even though they've come down a little bit, then the higher interest rates. But the real issue for Carvana, the debt load, and whether or not this is a company that A, can get back to profitability, and then B, has a runway to pay off the debt. Remember, they bought the wholesale retailer Odessa for a couple $2 billion last year, and a lot of people at the time said, okay, you're loading up some debt. Will this pay off? And they believe that it ultimately will. If you listen to the conference call, they believe that they can get out of this, though there are more than a few, like Adam Jonas, who have said, I don't know. I mean, the bear case Adam Jonas laid out, 10 cents a share, Sarah.
Vehicle affordability is deteriorating, with auto loan rates reaching a 15-year high. The average used car listing price is $28,000, which isn't particularly cheap. This is a major cause of the retail sales slowdown. So, what's next for Carvana? Investors are concerned that the company is sitting on billions of dollars in depreciable assets, burning cash in an uncertain economy. Retail unit sales and gross profit per unit are expected to fall in the fourth quarter, according to management. There are genuine concerns that the company will go bankrupt. The company's shockingly low cash levels, combined with the current economic climate, make it unlikely that it will be able to stabilize in the near future. Ernie Garcia, CEO and co-founder of Carvana, stated that the used car retailer is preparing for lower demand and higher depreciation. We are basing our plans on the assumption that the coming year will be difficult in our industry and the economy as a whole, Garcia said. Many of these pandemic success stories are now in decline as consumer spending habits shift to accommodate higher interest rates. Will Carvana drop to $1 per share? Will the company recover once the economy returns to normal? Only time will tell how the used car retailer will deal with the current economic downturn. Carvana's short-term outlook is bleak, with massive sell-offs continuing as the company struggles to regain investor confidence. Please consider subscribing if you find this video useful. Leave a like and a comment about your thoughts on the crash of Carvana shares. Thank you for watching.